Because you bought more Peloton, which surprises me. You bought more Netflix, which I don't know if it surprises me as much, but nonetheless, both are interesting moves and to me make a bigger statement about where you see the market going. Am I wrong?
You're both right and wrong. You're right because the market has had incredible resilience. Well, Scott, you are always right, but in this case, a little bit wrong. So we think that you have to be discerning. The market is rewarding those stocks that show that they're beating expectations, that their earnings not just match whatever had been the guidance, but they take it higher. And in the case of, for example, Blackstone, they beat and they raised more or less, and the market was very excited. That stock is performing really well. In the case of Netflix, they beat the number, but the guidance wasn't as good. In the case of Peloton, there was an accident. The stock had been doing very well. They had an event. In both of those cases, we believe there are specific reasons that those stocks are very attractive for us to buy at this time. And they both come down. Both have been great COVID performers. We went through this long period of reopening enthusiasm. You know, the market has priced up those reopening stocks to a level that perhaps they can't carry the market, even if GDP growth is 6.5% or 7%. We're looking for opportunities in names that we think will exceed the expectations going out a couple of years. And in both cases, the market has punished Netflix and Peloton. We think looking out 2 or 3 years, you're selling at multiples that are not very dramatic, not too extensive, and we think they're very attractive at the prices today.
Okay, but let's be clear. If the market does, Carrie, have a substantial pullback like some are calling for, or a correction of any magnitude, those stocks are probably going to go down with the market. Don't you think so? So by buying more of those today, you're essentially saying that you don't believe the hype about a correction.
Yeah, I think that there is a lot of talk about a correction that is not necessarily well-founded. You have to always be cautious. You have to be skeptical. If we look at a chart that Vinny pulled together for me of all the times in the last 42 years when the S&P was up 10% or more for the first 110 days of the year, you can see that there are 8 cases. The average gain for the year was over 20%. There are 5 cases where it's more than 20%, big numbers, and in no case did the market go down in a year that started out so strong. That doesn't mean it's going to happen. Let's not be like Pollyanna and say it's always going to be great, but that's a pretty strong indicator that starting off a year this strong with GDP growth as expected should result in a decent year at the very least, and not some kind of, massive correction. Of course there'll be a correction this year. There are always corrections. You have to prepare. That's why we sold a little bit of some of our best performing names. We've talked about like Twilio or PayPal, or you sell some of the winners like Zoetis, but you have to keep putting the market back where you think that it's most attractively priced and where you have the opportunities. So no, we do not think that the market is going to have a major correction this year.